In today's video, traders, I'm going to be talking about the number one strategy that I have used in Forex personally, and the one that I have had the most success with in terms of finding good places to get in and get out of markets. So stay tuned. We're getting into it right now. Hey guys, welcome back to my channel. My name is Nick and I talk all about trading and investing, mostly in Forex and stocks. And if you're new to my channel, please consider subscribing. If you leave the video a like, also it will start recommending you more content from traders, probably more from my channel and maybe from some of the other ones out there that are great as well. So anyways, today we're talking about one of my favorite styles of trading. This is something that I do almost all of the time. This is like my main sort of strategy, one that I've kind of relied on for the long term in terms of technical entries and exits. Now, I want to also just go ahead and say that most of my trading does involve some level of fundamental analysis. I've done some videos about that on my channel. Again, make sure you're subscribed so you can get more free stuff in the future. But in terms of the technicals, this is far, and there's no other strategy that I like better than this. This is the way I like to get in and get out of trades. So with that said, let me also offer a little bit of a disclaimer. Of course, I'm not a financial advisor and you should probably do your own due diligence before doing any sort of trading. I also want to say that I'm going to be doing a little bit of cherry picking in this video. I want to say that up front because I am not a crystal ball owning individual. If you've got a crystal ball, you can send me a message anytime and I will gladly buy it from you. But I'm not a crystal ball owner. And what I'm going to be showing you guys is, of course, cherry picked examples. Now, when you see these on YouTube, a lot of times people will say, oh, well, you know, I sold right here and then I bought back right here, right? And you'll see those examples. And of course, it's easy to say that on historical data, but I am going to be using historical data and cherry picking a little bit to show you guys some good examples. So with that disclaimer out of the way, let's talk about the actual strategy itself. The strategy, to be summed up, first of all, we need to find a strong trend in the market. Now, trends are the absolute most important component to my trading. Looking for strong, dominant uptrends or downtrends is by far the most important step to finding the setups that give me the best trades in my strategy. What I mean by this is I am looking to jump into something that is going to carry me as far as possible. I'm not trying to reverse everything that happens in the markets. A lot of times what you're going to see new traders out there doing that get stuck doing this over and over is they try and sell what seems to be too high and they try and buy what seems to be too low. And if you don't believe me, actually, you probably should take everything I say with a grain of salt, and everyone else on YouTube for that matter. What you should do is you should go look at the retail information that is posted out online, things like my FX book, Daily FX. There's different places where they share retail sentiment. And I almost certainly, every time I go to look at this, when I see a market is screaming to the upside, guess what the retail trader is doing? What do you think? Think about it for a second. Do you think the retail trader is buying as markets are trending up or selling? The answer may surprise some of you guys. They are selling. When the market, you can look at this again, don't take my word for it. Go look at the retail sentiment tools out there and you will see that usually when this market is chugging higher, all the retail traders are trying to short, and they're getting smoked and their stop losses are getting hit again and again and again. And maybe it won't come as a surprise that my absolute favorite strategy and best entry style is doing the exact opposite of what the retail trader is generally doing. Now, retail traders, there's nothing wrong with retail traders. I'm a retail trader. I'm not an institutional trader. I've never worked on Wall Street, or I'm not some super crazy, intelligent, genius quant trader or anything like that. Although I did go to school for programming and my grades just were not good enough for that sort of thing. I am just a normal dude. And if I can do this sort of thing, I am very confident that other people can as well. Of course, it's not easy, and I'm not going to sell you a magical course that can teach you anything like that. I don't even sell a course, but the idea is that this is a concept that you can just re-engineer what the average trader that is losing is doing. We know the simple fact, 95% of traders fail, right? They lose money. And so when they're all selling this uptrend, I'm looking to try and find opportunities to go long. Now, That's easier said than done, of course, because a market can reverse and all that sort of stuff. But let's talk about the actual entries and exits. Like I said, the first thing that I rely on is finding those strong trends. How do I find strong trends? Well, I'm looking at the 200 and the 50 period moving average. Very simple, I know, very rudimentary, elementary level technical analysis is using something like the 200, which is this red one, and the 50, which is this blue one. Okay. And all I'm looking for is these two to agree, because when these two agree, what that means is that markets have been moving enough that the short-term momentum and the longer-term momentum are headed in the same direction. Once I spot that, now I'm looking for key levels of resistance in the market in a downtrend. Let me actually draw that out. In an uptrend, the first thing I do is, of course, I spot which trend we're in. Actually, you know what? We're going to also add sideways. Okay. So for this strategy, for this approach, we have three scenarios. We have a strong uptrend, a strong downtrend, or a sideways market. Let me go ahead and say that if we are in a sideways market, I am doing nothing. I am going to lunch, I'm chilling out, I'm working on YouTube videos for you guys, I'm talking to my employees, we're doing anything else, but we're not trading. Because for me, when a market is just straight up sideways with this strategy, now I should also say there are ways to trade sideways markets, and we've talked about those sort of things on the channel as well. But for this strategy, for, again, like I said, my #1 entry and exit style, I'm not taking trades with this strategy in sideways markets because I rely on trends. Right? So when we have a trend in place, that's where things get interesting. So in a downtrend, I am looking to sell resistance. And in an uptrend, I'm looking to buy support. Now, I know that for some of you guys who are veteran traders and you're super experienced and you know, Trader Nick, you sound like a baby Pips teacher right now. Let me just say this. The stuff that has made me the most in my trading, or I guess has given me the best performance, is the simplest stuff. It's not something that's packaged up in a course and sold as a secret strategy or indicator or a magical style. It's not that. It's really the simple stuff. And then once you get the simple stuff down, it's about risking small, managing your emotions, managing the psychology, all of that sort of stuff. Looking for opportunities, finding ways to find more opportunities, such as implementing software in your trading. There's a lot to this stuff. It is not easy to become a successful trader, and there's no simple, you know, one size fits all, this is just so easy way of doing this. Because again, for every time you make money, someone else is losing money. And for whenever you lose money, someone else is making money. So nobody's just gonna let you take their money, right? This is a competitive industry. With that said, my little side rant, buying support, selling resistance, and doing nothing in sideways trends. So now that we know, generally speaking, that in an uptrend, I'm looking to be with that trend, going with the market, not trying to fade it like those retail traders over here, right? And again, there are valid reversal strategies, but for this one, again, like I said, just going with the momentum, not trying to overthink or rethink anything, just trying to go with the momentum and ride as much as possible. Looking to buy support, sell resistance. That's like the simplest way I can put it. Now, then the question becomes, well, how do we draw support and resistance? Again, another very simple concept, but it's putting these simple concepts together, guys, that makes a strategy you know, more robust and makes it a little bit more thorough. So once we have the idea of, okay, we are going to be selling resistance in a downtrend, buying support in an uptrend, that's where we need to start drawing in levels on the chart. How do you do that? Well, here's a more objective way that I like to do it. I'm looking for points on the chart where we essentially have a V-shape movement, okay? So check this out. You could have a market come down to, that is, markets don't move backwards. We could have a market that comes down to a level and then it kind of does something like this and does this, and then it finally starts to move up. And this level, I guess you could argue, is a supportive area. But what's more decisive, what's more powerful to me is a market that does something like this. It trends to the downside briefly, but then we find some sort of low that is pretty decisively a low. right? And again, this does require you to look back in time and cherry pick a little bit, but also just find areas essentially where the chart forms a V. Okay, and I call these just V-shaped movements in the market. I definitely did not come up with that name. You've heard of V-shaped recoveries in markets. It's a pretty common thing. But we're just looking for points on the chart where the market basically changed directions sharply. And this can happen on the downside as people buy sharply off of a low point. And we can also see it happen on a sell side. And the reason that this matters is that, again, when a chart does this, when a market decides that this level is a sell and this level is a buy, it is giving us information as to what market participants think about a certain area. There are people out there who think that markets are completely, entirely efficient, meaning that trying to gauge levels of oversold or overbought, or trying to ride trends, or thinking that you could take sort of setups that produce profitable results consistently over time. They think that that is all nonsense because the markets are quote unquote perfectly efficient and that prices are just almost completely random. You can look up this concept if you'd like. There's a guy named Eugene Farmer, I can't remember his name exactly, but he came up with the efficient market hypothesis. Definitely a very interesting concept to learn about. But for those of us who are not necessarily willing to think or definitely don't agree that markets are entirely efficient, there are concepts like this, where we're looking for opportunities to try and say where a level could be considered overbought or oversold, or a trend has the chance to continue, right? Again, that's another video for another day for sure. That's a big one, is efficient market hypothesis. Very, very interesting stuff. Anyways, I'm looking for V-shaped points on the chart. We can actually draw in some examples here, and you can see that I've already skipped ahead, but these V-shaped points are generally going to be where I draw my support and resistance levels, okay? So if we see points on the chart where we had V-shaped movements, and we're looking for sells, where we had V shapes are basically points to look for opportunities to try and sell. So when we have something like this, this shows us that buyers were present here, but then you might say, well, Nick, why don't we just buy there? Well, if the market breaks through that level, as it did here, right? On the retest, I am more interested in selling this because of the failure for buyers to hold it. So again, buyers were strong here, but then buyers were no longer strong here. So buyers were strong here, but over here they were weak because they could not hold that same area of support. So when that breaks on the retest of that area, I'm happy to try and go short, knowing that, okay, last time sellers won this area, right? So as we come back, it's a basic break and retest sort of concept. Now, the reason I say this is when we combine that with the trend and we look for opportunities where there's sharp movements in the market, that's where I can really get my best sort of entries and exits. So that is generally how I'm going to be looking for entries, is I'm looking for strong resistance points, right? And then I'm looking to get in on a retest of a level. For example, maybe we take a trade here. Here's that cherry picking concept I talked about at the beginning of the video. Let's say we did look to get short here. And then you might ask, okay, well, that's the entry, but how do we gauge an exit? So we've used a very simple concept looking for entries, trends, and then looking for pullbacks to key levels. And that's pretty much the basis of my strategy. I wouldn't say that, you know, what I do is incredibly more complex than that. I know a lot of people would hope that I've got some sort of secret strategy, but I really just don't. I really love to just trade with momentum, look for trends that have a good technical basis as well as a good fundamental basis. Again, that's another topic for another day. I've done some videos on fundamentals, but I'm looking for something that has a strong fundamental bias plus a good technical reason for entry, and then I'm looking to ride that trend. Here's how I like to do this. I don't like to take profits on my trade. I like to trail stops. And so for example, let's say that I put the stop here just above that 200-day moving average, okay? And then price starts moving in my favor. And let's say that if price gets down to, I don't know, maybe the recent low here, right? Then I'll move my stop to break even. And then from there, I'll just trail my stop further. So let's get rid of this tool for a second. Let's just say I got short here, right? This was my initial sell trade. We'll put sell. If we got short here and we had an initial stop here, okay? As this market moves in my favor and forms lower lows, which is, again, a very simple concept we talked about on the channel as well for identifying trends, right? Higher highs and higher lows. That's an uptrend. Lower lows, lower highs. That's a downtrend, right? So anytime we form some sort of breakthrough, a lower high or a lower low in this market, right? Here's a lower high. Here's a lower low. Maybe we start trailing stops. And for me, that might mean, okay, move stops to break even. And then assuming we're like right here, right? And then when price breaks further, maybe we trail stops up more, right? What now, again, we repeat that process over here. As price breaks through this now is our fresh resistance level. So I don't want to see price come past that. I want to see this price hold and continue, or just get me out for the trade there, which at this point would be locking in a profit of roughly 265 pips, which is a lot, but we're looking at a daily chart. So just as an example. And then from there, we could continue that process. Here's another point of support. We break through it, that area becomes resistance, and we continue lower. Now we've broken through this level. Maybe we trail stops up a bit more, maybe to like right here, right? Above that previous high. And all we're doing here is I'm stair-stepping down with the trend. And this is like the simplest, best approach to trend trading that I personally have, is evaluate structure, follow price with a trailing stop, and let the trend run as much as possible. Because we don't know what's in store exactly for the news and for price action. We could see a massive drop, and all we're doing is we are staying with the momentum. We're staying with the choo-choo train to the downside here, right? And this allows us to capture huge gains on small initial risk. Not always, and most of your trades are not going to be massive winners, but every once in a while, with this sort of entry and exit style, we have the opportunity to capture ginormous movers in the market. Let me give you guys an example here. Maybe we'll do one on the long side. Let's go look at NAS 100, because I took a trade. Shoot, I don't know if I'm gonna be able to remember exactly where it was. I'd have to go look at the old video, but I put out a video at some point where I took a long trade. Let's just say, for example, we're just going to make up a trade because I can't remember exactly where I got in, but it was a swing trade on the NAS. And this is basically a conglomerate of the US stock market. So I bought in on this thing, and this thing just wanted to keep going and going and going. It was somewhere after this dip, I looked to get long. And let's just say, for example, for the sake of example, let's just say I was an absolute monster and I just got the perfect entry. This didn't happen. I don't think it was this good, but just for example, let's say I did get in here. And again, cherry picking. I know before the comments roll in, I gotta tell you guys, I was cherry picking here. So in this case, let's just make up a theoretical trade running on this giant trend to the upside that we're seeing as the recovery continues here in the United States. Okay. And in many other places in the world. Let's say that we got in long here. Again, we got the perfect entry and we bought this market. As this market has run up, there's been plenty of opportunities if you're using a trailing stop. Now, I have to say this first. If you're just using a take profit here, then great, you caught a great move, but you may be leaving some of the massive movements on the table. So instead of doing that, let's say that we just put a stop below this recent low, okay? Again, nothing revolutionary here. I'm not a genius, not a magician, nothing like that. Just very simple concepts. We bought into a support level like this with a stop reasonably close by that's basically going to cap our losses relatively quickly, okay? Let's say that we risk something like, I don't know, 1% or 2%. With that said, if this price rallied in our favor and we trailed stops behind, let's say that after we formed this higher low, again, going back to our concept, let's say that we trailed stops behind it right around here. So on this day, we moved stops up to here, locked in about 1R already, okay? Now the market keeps going and it runs for another like 2 weeks. This is an awesome situation to be in, and it is easier said than done. Let me just say that. A lot of times, one of the struggles of traders, myself included, I struggle with this still, is when a market is running in your favor, it's so tempting to just want to take profit because you're afraid it might come back, right? We've all been there. But in this case, if we just let that trade keep going, that's where the occasional monster comes in. So in this case, now we wait and we see we're looking for another higher low. Here it is. There's the higher low. Now the market rallies again and you say, okay, at this point, I've left my stop in play for a while now. It's time to move stops more. So now at this point, let's say we're right here. We're looking at the chart and we say, okay, let's move that stop up again. Just below structure. Give price a little bit of room to run. Now we've locked in like, what, 3R now? That's like a big move. That's a serious move, right? Now, we rinse and repeat. This is where it gets so beautiful. This strategy is just, I'm in love with this strategy because it's so simple. It's so like rudimentary, and I'm not like, again, like I'm not putting a paywall behind this. So I'm not like, blowing smoke or anything like that. This is straight up just my favorite way of trading. Ride that momentum, trail stops, rinse and repeat. When this market rallies again, when we look for another level in the chart, and we rally off that, maybe we trail stops again. Let's say we're looking right here. Let's say we're looking right here, right? So price just rallied again. Let's move stops behind structure once more. Now we're in like 4R, right? Just from a quick look. We come down for a few days. We say, okay, maybe we're gonna get stopped out here. Nope, the trend is our friend and it rallies again. Now, at the time of even making this video, if I was in this monster trade, which would be nice, I'm not, I'd probably put stops right here. Locking in like 5R or 6R on this trade. All we did was risk initially 1%. Now, this does rely on something kind of interesting. It relies on entries to be pretty good. And I wouldn't be able to fully tell you that this is the reality of all your trades because it's definitely not. A lot of times what happens is you get in and then you get stopped out. And again, there's no strategy that doesn't involve losses or, being on the wrong side of the trade sometimes. But this does allow us for the occasional market to just absolutely run in our favor. And let me leave you with this. How many times as a newer trader have you bought a market or sold a market? And when it goes in your favor, you very quickly take profit because you're afraid of losing out on that money. But then when the tide turns and the market goes against you, you'll hold on to a losing position way too long. Has this ever been you? The only reason I say this is because I put this on my Instagram and a lot of people said that they have done this. They've been in the situation where they let a loser become big and they won't ever let their winners become big. But guys, I'm telling you, this strategy right here is probably the best one that I've come across because it does the exact opposite of what so many losing traders do. We allow our biggest trades to be giant wins and our losses to be uniformly small. That by itself, guys, is literally, I could put that in a course and I could sell it, but I'm not doing that. I want you to hear that because that is almost the biggest realization of my trading career 5 years into doing this, is just to reverse all of the dumb mistakes that you do as a new trader. Ask yourself, because you've got different mistakes than I do. Everyone has their own unique trading journey, but you have to ask yourself, what dumb mistakes have I made in the past, and how can I reverse them to not only stop doing them the wrong way, but now start dominating the markets in the right way? And I should take that back. You're never going to dominate the markets. The markets will always humble you if you think you're all that. I have to say that to myself because I realize I just sounded a little bit arrogant on that, but I'm just excited about this strategy because it really is what has worked for me. And, like I said, I don't want to just try and sell this. Like I'm not trying to sell you anything right now, with this strategy that I'm talking about. This is just something that I'm excited about and am passionate about. And I want to tell people about it because of, just the way it's been helpful to me. So again, take that as you will. It's free information. I hope that you have a great rest of your day. I will give you one sales pitch before we go. If you made it to the end of the video, seriously, thank you so much for supporting my channel. Like, actually, it means so much. You guys are awesome. The comments that I get on my channel are so wholesome. And it just makes me want to make more content like this because I know that there are other people out there that share this passion for learning about the markets and learning about general finance, investing, and trading. So thank you so much for being here. Please subscribe if you haven't already, like the video down below. And hey, here's my sales pitch. If you do want to join our community, my team and I, we have an in-person office in the Atlanta area. We offer a community for traders who want a well-moderated group. I know there's tons of spammy chats out there, but that is not what we offer. We offer a wholesome community for traders. We offer it on Discord. You can check out the link down below in the description, and there is a promo code for you if you want to join us. You can see all of the trades that I am taking, as well as our other experienced analysts on the team. You get access to our chat rooms. We do live webinars, and we do all sorts of other stuff that we put a ton of work in, and we have a team behind that. So if that sounds helpful to you, of course, there's my sales pitch for you, and there's a promo code for you if you would like to join. Thank you so much. Have a great rest of your day, and we'll see you back in the next video.